Hi, my name is Chester Johnson, and I'm the co-founder of the Stock Fossil Lab. Today I'm going to answer some of your questions. These questions were gathered by Malika Nicole. You can follow her on Twitter at Malika Nicole, and you can follow me on Twitter at Chester Charles. The first question is, can you explain the reason for the uproar regarding GME from a hedge fund and investor standpoint?
Well, the most basic thing I understand is that all of them are the greediest The thing I understand about the GME fiasco is that the whole concept changed halfway through. It first started off as a short squeeze, and then it changed to a pump and dump. So start with the short squeeze. This is where all the hedge funds start complaining. There was an obvious, blatant attack on their position by people out on the web to make them lose out on their short position. What happened is the most basic level. The hedge funds have bookies. These bookies, also called brokers, gave them some borrowed stock, some borrowed GME stock. So the hedge funds borrowed that stock and they immediately sold it to the market. Let's say for $15. I don't know the real number, but that's roughly where it was at. Their hope was the stock would then go down to $10. They could buy back that stock at $10 and then give it back to their bookie, aka the brokerage. That $5 delta they can pocket as their return. The problem is when you short squeeze a when you short squeeze a hedge fund and they shorted it at $15 and it goes up to $250, they shorted a whole bunch of stock at $15. So they borrowed this stock and they sold it to the market and they pocketed that $15. Well, now for every share of GME, they had to buy it back at $250. So whatever $250 minus $15 is, that's how much money they lost per share on GME. And $250 is roughly where CNBC was reporting that the big hedge funds were giving up. That was roughly where they were saying that the shorts were giving up, they're out. I don't know if that's all true. Please note that it's me looking at things that you saw. It's nothing, I have no other information that's inside of what was happening. But they probably were reporting that accurately because you can see the shorts, you can see what's going on the market. You don't know who's doing what, but you can see the different volumes and what's going on in the market. So the hedge funds were complaining because they lost a lot of money. Boo-hoo! They had to get some of them had to get credit lines from the other hedge funds buddies. When what's $1 billion between friends? Whatever. I don't really care about them. They got what they deserved. They had supposedly done too many shorts. So what happens is, a margin call is kind of what happened here. So the 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 brokerages, the bookies, were looking at them and saying, "Wow, you sold all the stock for $15 to the market. You need to buy it back for $250 to give me back my shares. You don't have enough money to do that. So we need to liquidate you. We're going to force you to liquidate your position, and you got to pay it now before this goes up anymore." That's where the short squeeze comes from. And by forcing the hedge funds to buy that stock, that also pushes the stock up. So now we're past the $250 mark. For all intents and purposes, the shorts are pretty much done with. But GME went up to $500, roughly, give or take. What happened? Well, the whole dynamic changed. You went from a short squeeze to what is a pump and dump. And so as investors that are just getting into it, you're about to lose your shirt and you don't even realize it. You think that you're doing this for one thing, that's you're being told, but the truth is it's now becoming a pump and dump. Maybe it wasn't nefarious, but when you've made a 10, 20x on the stock, greed starts to kick in, and you might want to keep people buying up your 10 to 20x returns. So for all the best intentions, greed is greed. That's the beauty of the markets. It doesn't care who you are or what it is. That's just when when everyone's against each other, when everyone's at the top, which one's going to sell first? It gets kind of tough there, right? Everyone wants to kind of get out and make their 20, 40, 100x return on the stock. So the pump and dump happened. I know the pump and dump happened because I got a call from my mom, and she told me, hey, my friend told me about this great stock that I should be looking into. And she got a 15-minute discussion with me about what shorts are and what a pump and dump is and why she shouldn't touch it. But she was a novice. She's not an investor. She's not even an investor. Novice investor isn't even the right term for her. And when someone, a relative of yours or a friend of yours, calls you up about a stock, you know there's something wrong. And once it gets that known, you've likely missed out. So I think this was, that was Tuesday when the shorts were over with. That Thursday had crashed all the way down to $120, and then started going back up. This was a very obvious. I know this is a horrible term, but it's a term. It was a dead cat bounce. So that just means that there is a hope that it's going to go back up, but already there was too much of a shock, and it wasn't going to go back up to its new levels, and then it played through. So investors could be really annoyed about it being a pump and dump. People were pumped and dumped on. For every winner you had in GME, hopefully most of it was a loss of a hedge fund. But the truth is there were normal people that lost out money and on what was basically a standard pump and dump. In the crypto world, I saw this all the time. You just pump and dump on each other. It's the Wild West and so forth. Now Robinhood stopping trades, I think it's a red herring. I think it's all. That sounds great. Robinhood was conspiring. Supposedly that's not true. I don't know. But it's a red herring, I think. I think the bigger problem was that you short squeezed some hedge funds, and then this whole group cheered, and then they didn't know what to do next. And so, the greedy ones of the group wanted to pump and dump on people so they can keep their 10 to 100x return. Should you complain about Robinhood? Yeah, but I'm biased for multiple reasons, so don't take my word on that. I would tell you to get rid of Robinhood or don't even bother with it, but make your own decisions on it. I think in this particular case, that's probably a red herring, so don't go completely by that. But I can understand an investor's frustration if you're trying to get out of this stock and you can't because you can't trade. There could be liabilities for that, but the terms of service look pretty much locked in. So I don't know if there's anything you can do about it. So that's what happened. If you want to come down to boil down to everyone's gripe, it's because everyone's greedy and no one won except for a few people, and so everyone's complaining. But that's the beauty of the market. You go in, and if you get screwed over, well, tough for you. I just hope that for the normal retailer that we're trying to help through the Stock Boss Up app, that note that those are trades. Trades are a gamble unless you are working at it. If you're working at it every day, you can make it a career. But long-term investing is about wealth, and that had GME and all that had nothing to do with wealth generation. Wealth is about companies that actually make stuff that they can continue growing and making more technology improvements to make more money. And you, as the investor, gets to see that growth, from making that investment. Trading is more of a career. It's something that you have to work at. It's different from investing, and the GME thing was a trade. So if you're an investor, don't fret about all the GME stuff. It's just a sideshow. There's a lot of great other things happening in stocks and in crypto. Thanks for listening.